Thank you for joining us on today's Single Premium Life webinar. My name is Joe Corio, Senior Vice President of URL Insurance Group, and we're very happy to have all of you on the line today. I want to give a special thank you to all our existing agents that are on the line and those agents who write business through URL. We definitely appreciate your business, and we know we couldn't be here without your support. For all you new agents, welcome. We are glad you're spending a few minutes with us today. We look forward to working with you in the future with all your insurance needs. URL is a full-service brokerage. We do life insurance, annuities, single premium life, health insurance, and senior products such as MedAdvantage and MedSup. So please check out our website at www.urlinsgroup.com. Okay, again, I'd like to thank everybody for being on the line today. We have a 30-minute program today to talk about why the time is perfect for single premium life. Very briefly, the annuity business has been booming for us. 2012 was a record year. 2013 was even better than 12, and so forth. 2014, we're probably having our best 6 months ever. So annuities has been very good. It's good to know that people are finally seeing the benefit of no downside risk that the index annuities offer. However, today we're going to talk about another product other than annuities. I mean, I love annuities. That's all I've been doing for the last 15 years or so. But the truth is, some people have needs that can be better served with single premium life. So that's what we're going to focus on today. Single premium life has changed dramatically for the better over the last few years. As folks are learning about the new single premium life, sales have started to soar. Each and every month, the sales at URL for single premium life increase. The biggest change is the living benefits that single premium life offers. So let's take a quick look as to why single premium life is so popular. First, let's talk about the rates on CDs. Hold on a minute, let me get my computer oriented here. Bear with me 1 minute. Okay, low rates. There's plenty of low rates on CDs, as I'm sure you're all aware of. There's an estimated $5.9 trillion in bank CDs, money markets, or passbook savings accounts. That's a lot of money just waiting to be transferred to the next generation. What better way than life insurance to transfer those funds? Life insurance has been and still is the most efficient way to transfer money from generation to generation. And with today's ridiculously low rates, it makes more sense than ever to move bank money. Number two, the high cost of long-term care. New long-term cares are expensive, and thousands of old LTC plans are being adjusted due to inaccurate premium assumptions from years ago. The high cost of long-term care, along with the restrictive underwriting of these plans, is leading to more single premium life sales. Last but not least, long-term care has the old use it or lose it property that single premium life with living benefits does not have. If the living benefits are not used, the policy still has many valuable features that make it attractive. So therefore, a single premium life is popular because of it's a great alternative for long-term care. Number three, old cash value life plans. There's thousands of old life plans that have lots of cash value and very little death benefit. It's not uncommon for us here at URL to see an old life plan with a $50,000 death benefit and a $30,000 cash value or so. And people are thinking, well, I don't maybe need this plan anymore, so maybe I'll get rid of it. That's not a good idea. How about single premium life? It's a way for policy owners to keep life insurance protection, with no further premium payments. We'll talk about that a little bit more as we go along. And finally, the last thing that's making single premium life so popular is taxes. Nobody wants to pay more taxes than they need to. And we can use single premium life to transfer taxable money into non-taxable life insurance. Now, we're not talking about avoiding taxes completely. We're talking about minimizing taxes. And again, we'll talk about this a little more later in the program, and we'll even give you some examples of how that works. Now, here at URL, we have a variety of single premium life carriers and products to fit your client's needs. Each of them come with their own unique provisions and underwriting. We represent the major carriers such as Equitrust, Baltimore Life, Lincoln, Americo, Genworth, National Western. As I said, all the top name carriers in the single premium life market. Now, almost all these carriers have products that have the same basic key selling points. Single premium life provides an immediate death benefit that's greater than the premium paid, and it's generally free from income taxes. These plans also offer tax-deferred growth. Now, plans are either whole life plans with set rates declared annually by a carrier, or they're UL or indexed UL, which happens to be the most popular plan later because it gives you the potential for the greatest cash value growth. And most of the indexed ULs that we use for single premium are tied to the S&P 500. So the reason that's important, that there's a potential for greater cash value growth, is because as the cash value grows, so does the death benefit. And again, the death benefit is usually tax-free if it goes to a named beneficiary. Now, one of the biggest driving forces in the sale of these single premium life products is the features that allow the client to have access to the current death benefit due to chronic illness, which is home health care, terminal illness, or even full-fledged nursing home confinement. So again, they can use the current death benefit for living benefits for home health care, nursing home care, or chronic illness. Now let's take a quick look at the two products offered by one of our top carriers, Equitrust. Again, we have a lot of carriers, but it seems agents prefer Equitrust because of the ease of doing business and the policy features and the underwriting, the liberal underwriting that they do offer. Now, Equitrust offers both a whole life plan, which is called the Wealth Sure, and an indexed UL plan called the Wealth Max Bonus. First, I just want to take a few minutes to talk about the Wealth Sure product. As we talked about, it offers a guaranteed death benefit, which is greater than the premium paid. And the guaranteed values on this plan are based on a 3% interest rate. It has non-guaranteed values, which are currently based on a 4.5% interest rate. Provides living benefits for home health care, long-term care, or terminal illness. And for emergency purposes, the client can utilize a free withdrawal of up to 5% of the account value should an emergency arise. Maybe the car breaks down, the chimney needs repaired, something like that. They can tap the free withdrawal privilege on this policy to help them out. Now let's look at the guaranteed benefits for a 62-year-old female who places $50,000 into one of these plans. The Wealth Sure would provide an instant guaranteed death benefit of $95,500, which is almost double the premium. And that face amount is guaranteed for the entire life of the plan, which goes to age 121. And as you can see here, the non-guaranteed death benefit is $100,237. And that's based on the current interest rate of 4.5% and the current cost of insurance. That is more than double the premium that the 62-year-old female put in. So wouldn't your prospect feel that this is a great way to leave more benefits to their beneficiaries than just leaving that $50,000 in a CD or maybe a mutual fund that's been going up and down and up and down and up and down over the last 10 years? Now, in addition, the death benefit can be used for living benefits as well. As you see here on the screen, based on the guaranteed death benefit, the plan provides for $95,250 of nursing care benefit or chronic illness benefit and slightly less for terminal illness. In other words, all the death benefit is available except for $250. Now, you need to take note here. We show the available living benefits based on the guaranteed death benefit because that's how the insurance department prefers that we do it. But in essence, if this policy has to be utilized for living benefits, we really look at the non-guaranteed death benefit. That's what the carrier will allow us to use. So the actual living benefits are calculated on the non-guaranteed death benefits. So if we look at the tabular detail for this policy, and we'll just show you the first 20 years here, you can see the guaranteed and non-guaranteed values. Again, in the middle column, the guaranteed is as $95,500. That's as low as it will ever be, and that is based on a minimum guarantee of 3% and the highest cost of insurance. And on the non-guaranteed side, on the far right, you can see that the values will grow over the years, and as the death benefit grows, the living benefits grow as well, because again, the living benefits are based on these non-guaranteed values on the far right. Well, we call them the current death benefit. So you can see in 15 years on this example at age 77, if this projection were to hold, the client's available funds for home health care or nursing home care would be $105,434 death benefit minus $250, because if they utilize it, there's a one-time charge of $250. So they would have $105,184 for health care. So that's a pretty nice advantage over their $50,000 original premium. Now, moving right along with EquiTrust, a more popular product in the single premium market is the Wealth Max Bonus Plan. This product is an indexed UL that offers 3 indexing options and a fixed account. And we'll go over those caps and rates shortly. Now, the potential for cash value and death benefit growth may be better than a whole life, similar to the potential an indexed annuity possesses over a traditional fixed rate annuity. Of course, past history does not guarantee future performance. But with high caps and the history that we've seen, this policy has a good potential for outperforming the whole life plan. Now, a quick look at the specs for this product show, just like the whole life plan, it offers a guaranteed death benefit greater than the premium, guaranteed values and non-guaranteed values, and we'll cover the specs and caps again in just a few minutes. But what really makes this particular product so popular is a 12% premium bonus and a full return of premium option for the client. So when you say to the client that you're going to get a 12% bonus, and if you ever need your money, you can have your money back or you can surrender it, whichever is greater value. I mean, there's not a whole lot of objections they can throw at you on this plan. Again, the Wealth Max bonus offers living benefits and the 5% free withdrawal feature, just like the whole life. Now, using the same example we did on the Welsh Shore, the 62-year-old female with $50,000, you can see here the guaranteed death benefit, $98,000. The current death benefit, $131,287. Again, that 12% bonus really helps jumpstart, and the indexing also helps. And if something were to happen to this client in right away, the full $131,287, with the exception of a $250 fee, could be used for home health care or nursing home care. So looking at the tabular detail on this plan, you can see the guaranteed and non-guaranteed values. Again, the guaranteed surrender value onto that column is always the premium paid, $50,000. You can see the death benefit's a little higher, $125,473. That's even guaranteed. And then on the far right, you see the non-guaranteed values. The actual death benefit is $131,287. And how that's calculated is they use the historical returns of the S&P over the last 25 years with today's caps and interest rates. So that's how those figures are, the non-guaranteed, are calculated. On the guaranteed column, they're using the lowest interest rate possible that can be credited, which is 2%, and the highest cost of insurance per thousand that the company is allowed to take out. So basically, the guaranteed column is your worst case scenario. A lot of times on the guaranteed, I get a question, well, why does the death benefit start up so high and then it drops until $98,000? Well, the reason for that is we're crediting a 12% bonus right up front. And again, these numbers are only showing a 2% interest credited and the highest cost of insurance. So over a period of time, especially the first 10 years, the death benefit might go down. Again, those are just the guarantees. The non-guarantees, they're going to fluctuate based on the S&P performance, but you're probably more apt to experience returns closer to the non-guaranteed than you are the guaranteed. Okay. Again, your 5% free withdrawal is available on the non-guaranteed accumulation value. So if you look in that column, if the client ever needs funds, they could take an emergency amount each and every year after the first year of 5% of that accumulation value. And you can see also the surrender values. Cash surrender value column on the guaranteed is always $50,000, but on the non-guaranteed, because of the bonus and some indexing, it's very possible that the client could surrender it after 1 or 2 years and walk away with a lot more money than they put in. The surrender charges on this plan are 10 years, and they start at 10%, and they go down 1% each year. So it's 10, 9, 8, 7, and so forth. These plans offer tremendous commissions, way above those of the annuity business that you'll see. The Welsh Shore offers double-digit commissions, and the Wealth Max bonus offers pretty high commissions, higher than almost all of our annuity offerings. So there's some good potential there, and I'd be glad to talk to you about those. Now, hopefully you'll have a feel for how the products can work for your clients. And right now we're going to take a couple of minutes. I'm going to turn this over to my associate, Maria Adams. She is going to go through the underwriting process so you get a feel for how easy it is for your clients to apply for and receive this type of coverage. And if you have any questions, please type them in on the screen. We will answer each question at the end of the presentation, so don't hesitate to type them in there. Right now, I'm going to turn it over to Maria, and then in a few minutes I'll come back and we'll discuss who the prospects for this type of plan really are, and I think there might be a few on the list that you haven't thought of. So, but before we get to the prospecting, I want to turn it over to Maria for the underwriting aspects.
Hello everyone. I just wanted to go over the specs on the two products that Joe had been mentioning. As you can see here, the issue ages for the Wealth Max bonus is age 50 to 85. For the Wealth Shore, the issue age is 55 to 85. The minimum issue for premium on both plans is $10,000. And again, this is all single premium products. The maximum issue is $750,000 for the face amount. Another nice feature with these two plans, again, free withdrawals up to 5% of the current accumulation value each year starting year 2. And you can see here the interest rates and the caps. For the Wealth Shore, the current interest rate is 4.5% and the minimum 3%. And for the Wealth Max bonus, you can see the current interest rates right there in front of you along with the minimum guarantees. And the other nice feature for both is the living benefits. And just a little note here too, you're seeing that these caps are higher than the annuities, and that's because there are mortality charges in the policy. The life insurance companies, they don't have to rely on making a profit on the spreads like the annuities do. So that's why you will see that these interest rates are a lot higher. And again, as Joe had mentioned, the commissions are really great on both plans. Going to the next screen here, I just wanted to go over the statistics on the two products. You will see that the Wealth Max bonus, the percentage of sales is 77% compared to the Wealth Shore. The only reason why is the big feature with the Wealth Max is that 12% bonus that they're providing for your client along with the return of premium. So sales are higher with the Wealth Max. The average size premium you'll see here is around $81,500. The gender, females absolutely love this product. Again, paying a single premium on a life insurance policy, knowing that they have some living benefits, is a good sales for these individuals just because they never want to be a burden to their children. So women do hear this and they really, really go for this plan. Source of funds, you'll see here that it's normally cash with app or savings account or CDs where the funds are coming from. And then you'll see then it's annuities and life insurance. Especially with the old life insurance policies. You may have some old life insurance policies that have some cash value in there and it's really not doing anything for them. We're seeing a lot of business coming that way with life insurance. The average age, you'll see it's about 72, and then you can see the breakdown on the other ages. How to get started? It's very simple, to say the least. Once you're appointed with Equitrust, all you need to do is complete an application and the disclosure with your client. While you're with your client, we ask that you initiate the telephone interview with them. It'll be easier to get this phone interview done while you have your client because they're going to remember and have all the questions fresh in their mind, especially when it comes to their meds and doctor information. And then once you've completed the application with your client, we ask that you can either fax the application into the home office or mail it. And within 48 hours, you're going to know if your client is going to be approved or not. It's that simple. The nice thing also with this is that there's no pyramids at all whatsoever. After the phone interview, if the company feels that they do need an APS, they'll order one, but there's no pyramids at all. So very easy concept here. So now I'm going to give it over to Joe to talk to you about who these prospects are for these plans.
Thank you, Maria. Okay, prospecting for the single premium life. We already mentioned in the beginning of the presentation, there are trillions of dollars in banks, CDs, money markets, passbook savings, a large portion of that sitting in accounts earning less than 1%. And it's just waiting to be transferred to beneficiaries upon the bank holder's death. These are great prospects for single premium life. People are very tired of the low interest rate environment, and they are looking for options. and the full return of premium for this plan takes away a lot of the objections that you might have heard before. So because people do have access to their money, and if they don't want the whole thing, they can access for emergencies 5% of the account value. Wouldn't your clients want to immediately increase the beneficiary's inheritance by 30 or 40% or more into a tax-free death benefit and still have full use of the money? So this is a great product to pitch to clients who have money in the bank. We also mentioned the high cost of long-term care. Many folks not only don't like the high cost of long-term care, they don't like the use it or lose it benefit that it comes with. These are perfect prospects for single premium life. If they move the funds to single premium, they can use the funds for care, or it goes to the beneficiary. Either way, they never lose the money. It's never lost. Also, maybe some folks you've been working with have been declined for long-term care coverage because of underwriting. After you completed that 50-page application, got 3 APSs and all that, and it was declined. Well, single premium life is a life policy, so it is underwritten for mortality. So we have many long-term care declines that we have issued under single premium life plans. It's totally different to underwriting. So it's much easier, and like Maria said, it's just an application and a phone interview. Rare instance, they'll ask for an APS, but most times we're getting 48-hour turnaround time. How about existing life clients that have old UL plans that are ready to implode, or ones that never add premium to anymore? They're perfect for this. Now, what you might want to look at, if you're a life agent and you get annual statements from your clients, and you've noticed that maybe over the last year or 2 or 3, the clients are not putting any more money in it, and the cash value is just about ready to max out and it's going to start to decline, those are perfect people to get back to and say, look, I noticed you haven't put any money in your life insurance. Obviously, you don't want to fund this thing. What's going to happen is the cost and the fees in your plan are going to eat up your cash value, so you're eventually going to have nothing. Why don't we take that current cash value and roll it over into a single premium life? It'll still give you some death benefit. You won't have any more premium payments. And in addition, if you have a need for some home health care or nursing home care, you could use the death benefit for that. And we see more and more, we're seeing some of that kind of stuff come over this way. Finally, annuity clients. That's right. Annuity clients have no plan. A lot of them have no plans to use their annuity funds. Maybe they're earmarked for beneficiary, or they maybe just don't need that money. They have other money coming in. They don't need to touch their annuity. They may be great candidates for single premium life, because what's going to happen if they keep that money in the annuity, it's going to grow and grow, and depending if it's a qualified plan or a non-qualified plan, the taxable interest in it is going to grow and grow, and eventually their beneficiaries are going to inherit a tax time bomb. So let's take a look at how it would work to taking money from a non-qualified annuity over to a single premium life. Let's take this example of a female 65. If she had a non-qualified annuity with a cost basis of $100,000, that was put in years ago, maybe the annuity grew to $130,000, so there's a $30,000 gain, which if she cashes in would be taxable. Let's assume on the 30% tax bracket, she's looking at about $9 grand in taxes. So if she takes the $9,000 tax out of the $130,000 annuity value, she's still left with $121,000. If you put that $121,000 into a Wealth Max bonus plan, it would provide a minimum of $220,000 of death benefit. It would provide about $220,000 of living benefit for home health care or nursing home care, and you've done a really good job for a client. What's even better, she's only 65. Statistically, she probably has 20 or more years to live. So as this plan grows and grows and indexing gains are realized, this 220 death benefit is going to increase dramatically over the next 15 to 20 years on a tax-free life insurance chassis. So she's going to benefit from 20 more years of growth, and there's not going to be any tax to her beneficiaries in the event she dies. And if she uses it for home health care or nursing home care, it's going to be tax-free as well, thanks to the tax law changes that had come about 3 or 4 years ago, excuse me. So with that in mind, let's take a look here to see if we have any questions. Yes, we do. So I'm not sure if I qualify for Equitrust. Is that a text? Oh, okay. We'll get in touch with you in regards to that. It was a licensing question with Equitrust. If Equitrust doesn't work, we do have other carriers as well. And keep in mind, you know, Equitrust is in most of the states, but I know in Florida, for instance, they have this policy, but not all the riders are approved. We have other fine options in Florida and other states where this particular product might not be available. And we'd be glad to work with you on that. So I hope everybody has a better understanding of single premium life, how it works, and who might benefit from it. And now it's time for you to go through your files and see who you should be contacting about single premium life. We'll be glad to review the plans with you one-on-one, the procedures or prospecting ideas, any questions that you may have. You can contact either myself or Maria Adams. And let me just get our contact information up here somehow. There it is. There it is. There's our contact information. If you want to give us a call, or we'll be glad to discuss any underwriting or give you an individual proposal for your clients, and talk more about why single premium life is so popular at this very time. We want to get you out of here right on time, which I think we're doing. Oh, 2 minutes late, but we do look forward to working with you. We appreciate you taking a couple of minutes with us today, and have an awesome day and enjoy the rest of the summer. Thank you, and take care.